curious, how long have you been investing for yourself before the fund? And were you investing before your working experience, and how you approached changed from investing for yourself from investing money from other people?
Yeah, thank you for that question. So that's really how I learned to invest, was just simply investing my own money. I sort of caught the investing bug in the dot-com crash, just when there was just an incredible period to be investing because things were so cheap. And it was a lot of fun intellectually. It's also a lot of fun when you're making investment decisions and then making money. And so it's sort of like I really loved it. And ever since then, I've sort of been investing my own money and constantly trying to learn about investing and get better and that kind of stuff. And in 2004, I moved to Switzerland and started working for this sort of family office based in Tessin. And the family office was sort of run by this sort of very sort of patriarchal, sort of octogenarian Italian guy, and he sort of called the shots. He said, what you have to do, and I didn't really like it. I was sort of enjoying investing my own money, and hated like someone else being the decision maker. And so this is sort of getting a little bit onto the topic of tomorrow, but I really wanted to be the one making investment decisions, and so that's why I set off and did my own company. And I was incredibly fortunate that the way RV Capital got started was my first client was a guy called Norman Rentrop, who's a publisher based in Bonn. And he was the one who provided the seed financing for the Business Owner Fund when it started in 2008. And the one thing he said to me when the fund started is like, do whatever you want, but just don't change. Just keep doing things exactly the same way. And that was great for me to hear because, I didn't know any other way to do things than the way I'd managed my own money. And he not only tolerated that, but he encouraged it. And so, since then, I've really never looked back. And I think I've managed to dodge a lot of the mistakes that the investment industry makes. And it wasn't because I was smart enough to see they were mistakes and make an active decision not to do them. It was simply because I just didn't know how the industry worked. I mean, I'd never really been in it. I'd only been managing my own money. And so it was a great way to start. Yeah. Thanks for the question.
I have a question just as a fellow fund manager. How do you think about qualifying investors into your own fund? Are there certain characteristics that make an ideal business owner fund investor?
Yeah, I mean, I kind of fell into this by accident rather than by plan. But when the fund started, I kind of thought, now I'm a fund manager, I better go out and try and find some clients. And of course, when you're like a very small fund with, at the time I had less than 10 million assets under management, zero track record, zero reputation because I'd only been managing my own money at that point. Of course, no one wants to invest with you. So I would like sometimes travel, like spend a whole day traveling somewhere to pitch to someone to invest in me. And then, after like having wasted a whole day on this, they would say, oh, sorry, we can't invest because you have to have a 10-year track record. I'm like, did I have to like lose a whole day first to figure that out? So I kind of like threw my toys out of the pram and like, I hate this. This makes no sense. I'm not doing it. And just focused really on the investing side of things. And then a sort of like an interesting thing started happening that every now and again, someone would reach out to me and to see whether they could invest with me. And it wasn't despite the fact that I was small and unknown and with only 10 million assets under management. It was because of that. Otherwise they wouldn't have reached out. And so I kind of stumbled on it really by accident that there's this incredible, powerful tool which is just to allow the right people to find you. Now, it's a lot slower doing things that way. If you to look at the assets under management of the Business Owner Fund, a lot of funds, they kind of do this and then they kind of hit sort of like the jackpot and then the assets do that. If you look at the Business Owner Fund, it was really very, very straight and still is actually to this day. So it's slower, and this gets a little bit into the topic of tomorrow, but I think it creates a much better investor base, and you just have to make sure your cost base is adapted to that situation. So if you hire like 5 analysts and fancy offices and all that kind of stuff, you're going to be in trouble if the assets don't start coming in. So then you're kind of forced to go out and find people. But if you have the patience to let the right people find you and a cost structure that fits to that, then it's worked really well for me.
Are there any characteristics of investors you accepted into the fund that you later regretted accepting in? And are there characteristics or qualities of that type of investor that you sort of take away as a heuristic?
Well, it's actually quite tough to invest in the fund, as everyone who's invested knows. So, fortunately, there's really I can honestly say we've never had an investor in the fund who I've regretted coming in. It's I have wonderful relationships with all of the investors. There's never been an angry word spoken between us, and it's really been a very fulfilling aspect of managing the fund. What I have done, though, is taken meetings that I've regretted. So for example, I have a policy that I never speak with intermediaries. I only ever want people who are managing either their own money or if it's an endowment or whatever. But I want people making their own decision, and I want to have that direct relationship with them. I don't want like some kind of salesperson or private banker or that kind of person as an intermediary. But one time I took this meeting with this sort of intermediary against my better judgment. And it was a great meeting. They really understood everything I was saying. And I thought, wow, this is turning out way better than I expected. And then right at the end of the meeting, they said, we can't invest in your fund, but we have this pool of capital which we could put into a new vehicle, but we would like take a cut out of it. So they basically were proposing some kind of a structure where they were going to take some of their customer funds for themselves. They were like, Rob, what have you done? So meeting finished and lesson learned.
Thank you.